Right. Despite that, they have their own initiative, the Electronic Liquidity Exchange initiative. How's that playing out from where you sit, looking at them and
Well, it's I think going to continue to be a very competitive environment for us, and I think in that way the major, let's call them brokers, will continue to want to grab more of the pie and the economics if they can. So we have to be very competitive, and the way for us to do that is to continue to focus on our customers, including them, and provide as much efficiency as we can. ELX is, I think, a continuation of a theme that has existed in our markets for 15 years now, where they kind of come together and they try to compete, and not successfully, at least heretofore. And our job is to stay one step ahead of them and make sure our customers are satisfied.
Right. One step ahead also includes some of the indices that you provide, for trading. Give us a sense in terms of how successful you've been, and what the take-up rate has been for some of your more recent initiatives on the index front.
Well, I mean, we have had a very long history of success in the stock index futures arena. Our relationship with S&P has gone now for 30 years. Our relationship with NASDAQ for 15 years. We view them as strategic partnerships. We have a very high world market share in stock index futures trading. Most of the products that we trade, we invented. And we have tremendous IP, intellectual property in those products. We're an extremely innovative organization. A lot of times the innovation is from within. It doesn't come from the customer. We develop contracts and we try to develop liquidity. And
despite being the world's largest, derivatives exchange, you're very entrepreneurial as an organization. And I think that your chairman emeritus, Leo Malabat, is he still very active in the organization? Is he still, contributing ideas to, what you need to do to be innovative and all that?
Yeah, for certain. I mean, Leo continues to be, like many others. We're benefited by the fact that we have a really unique organization at both our board and our management level. Many of our senior leaders have been around for anywhere from 25 to 45 years. Certainly Leo's been around a long time. Jack Sandler, who's been our former chairman for 14 years, I think. Our current executive chairman Terry Duffy and our vice chairman Charlie Carey. I mean, we have a board of people who are knowledgeable, experts,
and noisy.
They've
in
lived
the sense
through.
That always opinionated and.
Yeah, no, absolutely, and that's one of the things I love about CME Group is it's. I call it always an intellectual meritocracy because it's very competitive. There's a lot of different people with a lot of different ideas, and we capitalize on that.
Right. The entrepreneurial instinct also plays on the fact that you're probably the busiest exchange going out, doing deals, and recently you had this deal with the exchanges in India and this week in Malaysia, for example. What's happening on that front? What are you looking for in terms of collaboration with exchanges, especially in emerging markets, I guess? Is it being driven by a philosophy or?
Absolutely. I mean, we are a global company, and we are pursuing a aggressive globalization strategy. And essentially what we're looking at is we're saying, okay, we still have tremendous growth prospects in our current core businesses and core geographies, but we have to be part of the growth that is occurring and will occur over the next several decades in emerging markets.
But
we have a major investment in Brazil. We have a important partnership with Korea. We're entering into a new strategic partnership with Bursa Malaysia. We have a 25-year partnership with Singapore.
Yes, but like if you take the partnership with Singapore, they have the option of going it alone or plugging into a CME exchange relationship. What's the trade-off in terms of working with CME and trying to create a market on their own?
Well, we've designed our strategy and our tactics around those realities. And we recognize that emerging markets want to develop their own financial infrastructure. They want their own stock exchanges, their own futures exchanges. They want to control and own their own technology and their own product development and whatnot. And I think that's to be respected and capitalized on. And so if you are familiar with our approach, what we've done is we've partnered strategically, typically with cross-equity investments that align our interests and promote an environment where we want to work together to our mutual success. And then underneath that, we try to find commercial relationships where if we add value to each other, then we each get paid. So we might have order routing services where, for example, in Brazil, we're becoming a very large provider of order flow into the Brazilian market using our customer base through CME Globex.
Right.
Conversely, they're introducing us to a lot of Brazilian customers who are becoming increasingly aware of and accessing CME Group's core products. And so we're happy to pay each other for the growth that we're achieving. That's the model that we're using. It's one of collaboration and really 1 and 1 equals 3 versus 2. And if it doesn't work that way, it's probably not a good strategic partnership.
But as you do that worldwide, in a number of countries, you're forced to take on minority stakes, and it doesn't really show up in your books, and yet it ties up your capital, it ties up your time building those relationships. Do you see that there is only so far that you can go with this model, or you're just playing it through to see where it takes you, and then rework it?
Well, let me just begin by saying that I think the motivation isn't the equity stake itself, right? Our shareholders can diversify their own portfolios and gain exposure to Bursa Malaysia or Brazil or whatever emerging market they want to. So the equity stake is to align our interests, and it is also we're taking an equity stake because we believe that the things that we bring, whether it's technology or product development expertise or clearing and risk management capabilities or marketing and sales or whatnot, is going to accelerate the growth prospects of that particular company.
Right.
So generally speaking, most of these don't involve, relative to the size of our company, very much capital. We're a very large company.
Okay, a quick take on China and
Yes,
what you're doing on that front. I mean, you cannot avoid China. You got to figure out how you're going to play in China.
Yeah. Well, I'd say the quick take is that China is critical for the future. It is a less developed financial marketplace right now.
What do you have to do in China today?
Right now it's about building relationships with government regulators, exchange, and private sector folks involved in the financial markets, and staying involved and being consultative, helping build their competencies and capabilities.
Are you finding China harder than other markets in which you've been playing in?
I think only in respect to the fact that you can't compare the development of the financial markets or the derivative markets in a place like China with a place like Brazil or Korea, for example. They're just much more developed in the case of Korea and Brazil than China. But China is going to be a very important center of financial markets activity as they continue to open up and reform their current market infrastructure.
Craig, I have a lot of questions to ask you about what's happening on the technology front, what's happening at your back end, your counterparty infrastructure. I hope that we'll be able to have another conversation to build on that and what you need to do to stay up, ahead of the competition in this game. Thank you very much.
Well, we would love to do that. Thank you.
Thank you very much.